to MDOTM's webinar about how AI can help making better investment decisions. I'm Axel Maier, a partner of MDOTM, and will guide you through the next 40 minutes. So we're having more than 1,200 people signing up for this webinar, which is a clear indication of how current the topic is. Also, I think the attention ChatGPT is currently getting has helped to raise interest in the use of AI across different industries. And I'm sure many of you have tried it out, see what it can do, and have been amazed how easy it is to interact with AI. To explain AI's potential scope in the investment world, I would like to give you two quotes that summarize this very elegantly. One is from Ray Dalio. He's, as many of you know, the founder of Bridgewater. He said, AI is extremely powerful. At Bridgewater, we use it to work in parallel with our managers to produce better investment decisions. Kenneth Griffin, the founder of Citadel, said recently, balancing the influx of new tech like AI with the power of the human minds is key for better decision-making in the financial markets. So what we shall do today is to show you exactly how this works, interaction between man and human. And we shall show you a couple of examples and use cases of how humans can use this tool to make better, more informed decisions and save some time to focus on other parts of the investment process. And also, what we would like you to offer is, for you to try it out yourself. So you get your custom portfolio enhancement from us if you scan the code here and provide us with the holdings of your portfolio. We're very happy to run it through the methodology and to show it what the result is. We will give you that code at the end again. Well, I'm very happy to have Tommaso Migliore, the co-founder and CEO, as well as Joana Fernandes, our Sphere guru, and what it means. You will learn a little bit with me today. Before I hand over to them, I would like to give you a brief introduction of MDOTM. You will have also the opportunity to ask questions at the end of the session. So, MDOTM is a fintech company. It's very deeply rooted in science to help making better, more informed investment decisions. If you look at the company, this is very prevalent if you see the size of the team. So we have about in-house 60 plus people. Most of them are data scientists, physicists, etc. On top of that, we created the MDOTM Lab, which is a collaboration with 6 universities. In each of those, we have a dedicated group of professors, PhD and master students who do a lot of ground research for us, which is essential to make sure that whatever we offer to clients has been tested and tried excessively. This, again, we then turn into two services. So we either do manage money for our clients. We do that on an advisory basis, and it's about, about $1.5 billion right now. And the other part, and this is what we're going also to focus on to some extent today, is how the AI can be put at your fingertips, how to make it interactive, and to allow you to use the skills and the knowledge that we have been developed over more than 7 years now. So with that, just very briefly, that our client base is all institutional across asset managers, wealth managers, insurance companies, etc. So I think that gives you a little bit of a structure where we're coming from, and I would like now to hand over to Tommaso to take us through AI and the complexity and what it means to us.
Thanks a lot, Axel. Thanks a lot for all of you connected today. So before we dig into what and how our Sphere platform and our artificial intelligence works, let me start by telling you why do we exist as a business. I think it's very, very important to start from this point. We do exist because the financial market is becoming more complex every day. And this is happening because of two things. On one side, we live in an era of information abundance. A cool statistic is that about 90% of the data that we use today has been produced over the last 2 years. So 2 years ago, we had 10% of the data, which is always impressive to think about the sheer number of data that we're bombarded every day. And on the other side, the financial system is becoming more complex because there are more actors, more players playing in the financial game. And the dynamics, whether we're going towards a decoupling or not, are certainly making the system tougher to read. And this leaves us with a feeling. For everybody who's a professional investor, really knows what I'm talking about. We're staring at the painting, we're staring at the monitor, most likely, and we struggle to capture the overall dynamic of really what's going on. So the idea behind building MDOTM and the technology that we created, that's called Sphere, is really to try to work better with the depth of data to hopefully give a fuller and a brighter picture on what's going on behind the markets. We're lucky because we live in an era that we define of AI democratization, where artificial intelligence is no longer used by the people who develop it, but actually a lot of people can now harness the power. Okay, every complex technology at the very beginning is used just by the people who develop it. Think about the Wright brothers at the beginning of last century. They were the one flying the planes. They were the one building the planes. If you fast forward to today, a fighter pilot is a very talented pilot, but it does not know how to build a plane. There's engineer teams, R&D to make sure that that plane is really at the best of its ability. So that is the same thing with artificial intelligence. And I'm going to bring you here a couple of examples just to warm you up and give you a feeling. So the first example, of course, it cannot be ChatGPT. Okay, you guys are very familiar. Everybody has played with it. It's really has taken the world by a storm. And apart from doing random thing, I'm going to show you some practical thing on how really ChatGPT can help you in your day-to-day life. And this is a very cool example. If but it's very basic, but it's a very cool one. If you ask ChatGPT to write a non-disclosure agreement, it's going to write a proper one. And the beauty is that you can bring it to a law firm and they can check it. It's really well done. But at the same time, you can actually make a lot of adjustment. I'm making here just a simple one. You can say, for example, make the term of the agreement 3 years, and it's going to respond to this by making an adjustment. Now, this looks basic to make an adjustment. It's not, and that's really where AI and human can work better together. And we'll see this in the investment world in a second. But before we do this, let me show you another example, which is called Midjourney. Completely different artificial intelligence. This one is to do image processing. And I'm going to show you an exercise that a friend of mine, she's a graphic designer, she had to design a cover for a magazine. And she designed the cover with the AI. It was not the AI to do it. It was not the human. It was really man plus machine doing it. Okay, and she did this. She said, generate a new image based off of the style of the one attached. But this one is of people skiing in the mountains with a chalet on the background. And then she uploaded how she likes to draw people. That's her personal style. That's the first drawing produced by Midjourney. Okay, it's not perfect. It's a new one, but there are a few things that are not working very well. So what she did, she went back, and this is making a long story short, but what she did, she made a certain sequence of suggestions, such as make it more of a skiing party in front of a chalet with people wearing skiing gloves, jacket, boots, and stuff, right? And so by interacting with the AI, this is what the AI produced after a few iterations. That's the output. And what she did, she jumped in via Photoshop. She edited the picture, color corrected, and it became the cover of a magazine. Now, the interesting thing is that, again, this was not designed by an artificial intelligence or by a human. It was done together. And that, and that really is what we're after here. If we think about the world of investing, over the last 50 or at least 30 years or so, has always been almost a battle by people adopting a more traditional approach and people adopting more a quantitative approach. But very rarely they've been able to work together. So the goal of Sphere is to really bridge this gap, to give a true support and a technology that can really help portfolio manager, head of investment, CIO, head of advisory, people in charge of making investment decision that have now a support of the technology. What's the difference between the example that I gave, such as a ChatGPT, and the real case of investing? Well, to understand that, first we have to ask ourselves what investing ultimately is all about. And it's all about two things. One thing is called intuition, which is the ability to predict and anticipate a future trend with a certain degree of accuracy. And the second pillar is discipline. Discipline is being able to stick to a plan. I always say that, investing ultimately is combining risk well together. And here artificial intelligence can support on the both ends. Why? Because on the intuition, and we've been around now for 7 years, AI has a statistical edge. Looks at a lot of data, a lot of information through macro data, fundamental data, market data, and can provide almost like a sounding board, a different perspective on what the future might be. But again, the intuition, everybody has their own point of view, and often the intuition is often driven also on how the portfolio should look like. So where the AI actually can make everything happen together is on the discipline part. Because here it can combine all the data it looks at every day and just balance risk better together. The difference here is that this technology, therefore, is very flexible. And it's not just applied for one thing, but it's applied for a multitude of things. This is how our clients are using our product and our technology. They're using it to do asset allocation, to do portfolio construction, portfolio optimization, as an input for the expected return or expected risk scenario, to run scenario analysis. These are just some applications. I'm going to show you a little bit more details in a second. The difference is that, of course, the usability is not conversational. Finance is too technical to have a text where you write down what you want. Otherwise, it would be a very long and boring text. Of course, there are sliders, a lot of things that are customizable. And these are just some of the high level. Then Joana is going to give you a deeper look. But this is how AI can be integrated, such as this example. Whereas you can play with the scenario, project, this is one of the modules in Sphere. You can create your own scenario and as well see what Sphere scenario. So from the intuition side, see what Sphere suggesting over let's say the next 6 months, see how the portfolio would behave, and then ask Sphere to create the best portfolio within that scenario. And you can do that in minute and very precise. So what are the applications? The applications are, first of all, Sphere is used to do portfolio optimization, whether it's asset allocation, portfolio management, so for example, fund management, or scenario analysis. I'm going to bring you here an example. One of our clients, which is a $300+ billion US-based asset manager, who's using Sphere to fit within their investment process. One of the things I said before is the goal is to bridge the gap from traditional investment to quantitative investment, okay, to move into a quantamental space. And Sphere can help you to do that. But to do that, we always stress one thing: technology should adapt around you, how you work, not the other way around. So how can we do this? So Sphere, this is just an example on how this client is using it. Of course, they have an investment committee, which produces a tactical view. These views are further reinforced by seeing how Sphere looks at the market in this day and age. And then, of course, they go from idea to portfolio, which is the fund invested. And of course, by going through this process, they have to go through and respect their strategic asset allocation, their fund constraint. And so they use Sphere as well as a multi-layer optimization that takes all these constraints ex ante and make sure that the final portfolio actually reflects the ultimate desired output. So what is the benefit of this? The benefit of this is that you can run multiple scenarios really in minutes. You can test how a portfolio would behave and how you would be best positioned in certain scenario accordingly from a fact-based point of view, from a data-based point of view. And of course, it's a good way to have that different perspective, which has no emotion and is just there to combine risk together. Provides this analysis to you, and then you can integrate it in your process. A different use case is to create, on the contrary, hyper-customized portfolios. And this is the typical example of a large European-based insurance company. Of course, as you guys know, insurance companies have very heavily constrained environment. There's a Solvency II rule in Europe that basically rules how regulates their capital absorption on how they take risk. So their goal was, how can we get the best out of our own investment idea? Because usually when you go from your idea to the portfolio, given that the portfolio is very customized and it's very constrained, often the constraint guide the optimization rather than the idea guiding the optimization or the goal. So their goal was to get to that 360 market outlook. So in this case, how we did it, it was a little bit different. We worked closely together. We integrated solvency requirements, so the capital absorption. And at the same time, they internalized through the use of Sphere, because Sphere can be used on single stocks and multi-asset portfolio. They actually internalized some passive investment that they were doing through passive provider. passive investment provider. And by having that control on top, they actually have a new dimension on how they can control their portfolio. So what did this convert? This convert into a cost saving of about $3 million, which converted into not needing to buying the same data again, removing people doing what really matters, so freeing time of people, and at the same time internalizing mandates, so no longer paying fees outside for a portion of the portfolio which was really passive and not really bringing any value. But the most interesting statistic is really this 2+ years of time saving. Of course, when we started working on this project with them, they already planned a 2-year journey, and we actually did it together in 4 months. So it was really pretty fast. And then last example, this is an application of Sphere to manage multiple portfolios by following coherently the house view. This is an application that a Swiss wealth management company is utilizing at the moment. Their goal is really, this is the typical problem in wealth management or as well asset management when portfolios start to multiply, to really make sure that you have your own central view and actually all the peripheral portfolio, they actually refer to that view that you might have. So of course, in this case, the integration is a little bit more complicated in terms of how it's done. Of course, it takes into account taking each individual portfolio, running through the portfolio, understanding what type of risk constraint and profile each portfolio has, linking this to a model portfolio, and then of course have a constant monitoring. So as the investment committee make changes or market conditions do evolve, you're autonomously notified as these changes happen. What's the achievement of this has been, we've seen a good growth on the top line because they had better client interaction and more control on their portfolio. So what they were doing is they're using Sphere now to actively go after client, either for new business proposition, or with the existing one to suggest how they could do better and basically position their portfolio more efficiently. But they can do this to scale. With this, I'll pass it on to Joe and Axel to actually show you a little bit better what Sphere is all about in detail.
I think Axel forgot to take the mute. I can...
Very funny, yeah. So this was a very good background where you now could see the results of working with AI in very concrete cases. What Joe is showing us now is how it's actually going, and she will take us through this tool, and you will get a feeling for how reactive it is, how adaptive it is, and how bespoke it is. So Joe, please go ahead.
Thank you, Axel, and thank you everyone for being here today. Very happy to be able to give you a quick walkthrough on Sphere. But first of all, just to give a bit of a context to what we'll be seeing, I would like to introduce you the 2 pillars of our methodology. Sphere's methodology is divided into a non-chronological learning, which is a pillar that is dedicated to the actual learning of the models from data experience. And the other one is the regime analysis, where the models try to detect and identify the current regime framework on which the portfolios should be optimized. Keeping this in mind, these 2 main pillars, we can look at Sphere as a division. We have 5 sections, but in fact, we like to present them as 3. Because dashboard, outlook, and outlook focus, we assume the AI cold view on the market, and the difference between them are the level of granularity that we give, also to give a bit of clarity on what Sphere is suggesting. Then we have the regime analysis tool, which is a module dedicated to the second pillar I have just mentioned, so risk segmentation. And finally, where it all comes together is on the Portfolio Studio, where users can create, upload, and manage their portfolios. To show you a bit better exactly how it works, I will share my screen. Okay, perfect. And this is Sphere. These are the 5 sections I have just presented, and I would like to start by showing the Portfolio Studio, which is the most interactive model we have on Sphere. Portfolio Studio is split in portfolios, references, and universes. Starting here with the universes. This is where users have the possibility to upload any set of instruments that they would like to use to manage their portfolio. So it can be a set of multi-asset instruments, a set of single stocks, or even a set of instruments that is related to a specific theme that the user wants to use when rebalancing or optimizing. The good thing with the universes is that they are editable and fully customizable. So at any time, the user can come here, they can add, they can remove instruments, and they can assign tags to specific instruments so that then the rebalance of the portfolio is a bit more tailored to their needs. The second tab, References, is where users can upload and manage the portfolios that they would like to use to guide a specific optimization. They can be tactical or strategic allocations, they can be model portfolios, or even a custom benchmark that the user usually uses for optimization. Finally, portfolios is where we will find all our portfolios created or uploaded. And going into one in specific, I can show you that we have a lot of data analytics on the portfolio, such as metrics relative to the benchmark. We have performance analysis, alignment to what is the sphere suggested optimal positioning, and also other things such as an exposure breakdown that can be seen at different levels, and there is a result of the look-through that Sphere does on the composition of every portfolio. Apart from this overview tab where we have all the data analytics, all the portfolios have a dedicated scenario analysis tab. As the name says, what we can do is, on the left-hand side, we can set a specific scenario, and on the right-hand side, we can assess the expected portfolio performance in terms of returns, volatility, and contribution by asset class. Everything, of course, relative to the benchmark initially defined. So, for example, Sphere's forecast is set as a suggestion, but I could decide to choose a past event that has already occurred and define it as the scenario that I would like to test my portfolio. Otherwise, if I don't want to use Sphere forecast and I prefer, for example, to maybe change the forecast horizon to 3 months and test a specific view or a combination of my view with Sphere's view that I have for the upcoming 3 months. I can tilt these probabilities, adjust them, and then, of course, I will be impacting also the expected returns and expected volatility across all the asset classes that are included in the portfolio. Okay, so coming to this tab, we can do scenario analysis, assess how our portfolio would perform, and then we're done. Apart from the scenario analysis, I don't know if you have noticed that we have a button here that allows us to enhance from scenarios. So, going back to the Sphere forecast, let me see how can I start this optimization. Clicking on the Enhance from Scenario button, I start all the procedure of rebalancing my portfolio. I will not go through every single detail, but I would like to give you the idea of how customizable and how tailored these enhancements or this rebalancing can be according to exactly what you would need to set on every step. So, first of all, we have the possibility to choose which is the universe that we would like to use. I showed you before, we have the tab dedicated fully to the universes where we can customize them. And here we can choose exactly which one we would like to work with. We can create a universe from the portfolio, so we will just use those instruments already in the composition. Or, for example, I can choose to use this specific universe for this optimization. On the next step, I will see the composition of my universe and I will see any specific tags that I have already assigned previously. Okay, we have also the possibility to set maximum and minimum single weights per instrument. So, for example, let's imagine I would like to set this at the maximum. This one is okay like this. And maybe I can see here that I can set the tag constraints. This means that for all the tags that I have created on my universe, I can tell Sphere, okay, the threshold for my preferred funds should be at least 10%. So let's see if we can get it right. 10% at least, and then a bit less, 35. Okay, I can activate these tag constraints for all the tags that I have put on my portfolio, and I can say to Sphere to respect these specific thresholds that I am defining. So in this example, I have set my specific tags. As I said previously, the tags are fully customizable, so each user can set their own and then set the thresholds accordingly. Moving to the last step, we have some more enhancement constraints and targets that we can set. First of all, we can select a reference. So as we saw previously, we have the possibility to upload references portfolios that we would like to use to guide our optimization. This means that, for example, if this was the case, and I would like to use my custom global benchmark as a reference, I can then set a limit for the tracking error that should be considered by Sphere. I can also tilt a bit and define my historical my risk constraint. I can give a target for the transaction costs and then some other targets that tell Sphere how much I would like to move my portfolio. Clicking next, you can see that Sphere is now calculating. So what Sphere will do is, considering all the parameters that we have set and all the constraints and targets that we have given to it, it will find and propose you with the optimal portfolio within your framework. Just to give you an idea on how it would look, we can see a proposal ready already in this portfolio. You have the possibility to jump from the current portfolio to the proposal one. You have already some exposure analysis on the composition as you had on the original one, and you still have the possibility to edit this proposal, meaning that you can review it and you can edit it in case there is something that is not in line with your expectations. Also, we are currently studying how to, trying to see how to include ChatGPT also on this part, so that we can create or allow you to create commentary on your portfolio to see what's the differences between the current and the proposal one, and so that you can create a reporting a bit faster so that you can share it either internally or externally with your clients. Finally, and just not to leave the other sections that I have briefly referred without a word, I would like to show you the market regime analysis tool. As I said, this tool is dedicated to regime analysis, market risk segmentation, more specifically across European and American markets. We have a lot of information such as the current regime detected, past market regimes, and probability evolutions. We have also some transition matrices across several horizons so that you can have a bit of a context of what happened in the past, and then also some information at the sectorial level. Okay, so for every sector, either at European equity market or American equity market, there is also a risk segmentation and detection of the current regime. Finally, dashboard, outlook, and outlook focus. They are different levels of granularity of Sphere's AI cold view on the market. So they all tell us a bit of what is Sphere's positioning, always trying to add a bit more clarity regarding the current positioning, the current regime detected, and the drivers that are behind Sphere's suggestions. I have briefly presented all the sections. We'll pass it on back to Axel so that we can open the Q&A. Axel, still on mute.
Technology. So I think that was really a relevant tour through what can be done. And I think that the path we have taken was interesting. If you think about the two quotes from Ray Dalio and Kenneth Griffin, they basically said, well, it's very important to use AI on the investment side, but it's critical to understand that AI and people have to work together to get the best results. And this is, when you think about the examples from Tommaso about the thing about intuition and discipline, this is the same thing, but that comes together. And at the end of the day, if we bring the human mindset and AI together, we get an augmented humanity, which is very, very powerful. And you've seen that if using AI in a smart way, it can lead to cost savings, time savings, and of course, it's a big differentiator to many other people who don't use that yet. And then the thing with this, Joana taking us through Sphere, you could see how easy it is to interact with this. And so, if you compare with the ChatGPT side, it's very, it's the same thing. It's a dialogue, and it can be very bespoke. And this is also, I think, one of the big differentiators about how you interact with AI. It reacts to you, it adapts to what you need. And this is with many other optimizers, you do not have that since they're very static. So we do have, not surprisingly, quite a few questions, and I have to. So let me just go through those, and we try to be as concise as possible, so to address many of them. But if we don't get to yours, please feel free to drop us a note. We are very happy to respond to them. So here's one from Ellie, and she says that the inputs for scenario analysis so far can be derived from historical data, with some extrapolation to take a forward view. Where does the AI actually come in on this? And what is the advantage of involving AI in scenario analysis versus just doing another kind of multi-path numeric simulation? So, Tommaso, in layman's terms, can you address that?
Well, very good question. So the benefit is not necessarily into creating scenario. It's most interesting to see two things. First of all, what type of scenario does the AI see for the upcoming future? That's the first added interesting bit. And the second one is that basically you can see how the future scenario, how the future portfolio would behave according to the scenario that you're projecting. So not really to simulate scenario, but simulate a response. And Joana gave us a feeling on this through the non-chronological learning. But basically the benefit, what is it? It's all about how you reuse the past in a non-linear way to create a probabilistic view of the future, okay, which is regime aware. So by combining all of these, you can create different scenario and multiple ways to do it. That's not really where the added value is. But then the interesting bit is how does the AI would allocate coherently to that scenario? And that's where the interesting bit happens, right? And it's similar to a certain extent as you would use ChatGPT, right? You would ask a question, see how it would reply to that problem that you're giving, and based off of that, create your own idea. And that's really what Axel is talking about, which is augmented humanity, we'd say, human plus machine. That's really the added value.
And just if I can add one point to that, and we often get that comment, well, it's historical data, so is it backward looking? So first of all, like all data is historical, right? So it has happened. But the way it is used, the way we look at it, and this is also what we mean with non-chronological learning, we look at data, but it does not happen. It does not matter when that data actually was delivered. So time does not play a role in the way forecasts are developed, which means that it's very critical that we learn from the past, we do not repeat the past. So I hope that, Ellie, that answers your question. So let me go to the next one. So this is from Elena, and she was asking if the algorithms can be tailored to investment professional specific requirements. So this is a little bit of, I think, Joe, what you have shown in your sphere, but can you maybe elaborate a little bit more on that?
Yes, sure. So I guess the straight answer would be yes, in the way that what we have in Sphere, or what you saw in Sphere briefly, all the inputs can be tailored to each of the users. So basically, by using Sphere and by rebalancing a portfolio with Sphere, you can always express your preferences, your limits, your constraints, and your objectives. And of course, that the optimal resulting portfolio will be the optimal portfolio within your constraints and within your limits and within your objectives. And I think that's one of the key things with Sphere, is that everyone can use it, but it's very customizable to your own framework.
Yeah, I think that's, if I could just add to that. So often, people make a comparison to that kind of portfolio optimization, portfolio forecast with more traditional optimization modules. And more traditional modes are very standardized what they can do. Whereas with the AI, it's so adaptive that it even doesn't matter if a lot of people would use the same AI, all the results would be different. They would only be the same, and everybody would have the same investment universe, the same restrictions, the same benchmark, the same forecasts, the same scenarios, and they would execute everything at exactly the same point. So that's never going to happen. So it provides you a very unique way of expressing the use and supporting your decision. So it is a tool. It's a very effective tool. All right. So also a good question coming from Slavko. He is asking, how do you check the results? Is there any effective process to produce integrity checks? So I think it's a very important question, since most people would say, yes, AI is interesting, AI is the future, but is it actually helping? Does it do something that it's adding value to a portfolio? So, Tommaso, can you maybe explore or explain where we see value, and maybe also give an idea about the scope of it?
Yeah, no, I mean, this is probably one of the most important questions. And the easy part about finance is that everything ex post is measurable. So there's multiple ways in which we can check that the process makes sense, that it's delivering the result that we were expecting. Because as time passes by, we can actually measure very, very easily how things have been going. And honestly, we've been around now for 7 years as a business, so we've been through our skin and life a lot of black swan events, because since we started the business, we've seen Brexit. For those who are connected through Europe, they remember it wasn't definitely an easy moment. 2018, then COVID happened, and now a war. I mean, and now inflation, banks failing, and all of these events that over the last years has not definitely lived for an easy market. The model has always behaved in a very robust way. We have to also understand one thing. These type of models are not trying to move around and catch opportunity here and there, buying here, selling there. They're actually way more stable than you would think. And that's why they actually can combine very well with the human mind, which on the contrary, the human mind is much better at spotting one-off opportunity that might be there just once in a while. Whereas what we do is we combine risk all together very, very thoroughly, and that's why the result is what it is, which is very, very robust and very reliable.
Yeah, and also I think that in our case, as you might have seen at the beginning, we do manage money for our clients as well, and so showing investment results are at the end of the day the ultimate proof that it's working. So we have time for one more question, and this was the one we were almost expecting, and I will amend it a little bit. It says, how does FIA adapt to changing market conditions, and how does it ensure that portfolios remain optimized and balanced over time? So maybe I give that to Tommaso again, also in the context what we have seen over the last days with the Silicon Valley Bank and Credit Suisse. So looking at that question, maybe you can also talk about how fast do we see a reaction, for instance, if a regime is changing or not, if you have these kind of events.
So it's pretty fast. It's pretty fast because there are some information that are coming from basically nowcasting, or basically looking at the status quo, and some information that actually are catching somewhat of change in market dynamic that takes a little bit to evolve. So the combination of the two make the model both kind of quick to adapt and at the same or react to changing in regime, and at the same time very aware of what type of regime change this is. We have to think though, going back to what Joana said about the non-chronological learning and the regime analysis, which are the two pillars that user can control, interact with, how these actually are in continuous learning. Okay, so the non-chronological learning constitute our experience and constantly is refined to find market dynamics. And to do this, what we do is we go back many, many years. We use macro data, fundamental, and market data. So a lot of data to describe the economic system as a whole. And we create a lot of examples. So all of the examples get retrained and reanalyzed on a daily basis. But that is just our experience, the data-based experience. The regime analysis makes the model regime aware. So that's why the model is very quickly to react, not because it needs to learn every time from the very beginning a new market condition. It can do that as time passes by, but it can react very, very time as the market regime evolves. And that makes the model very, very quickly to react. And we've seen it with our own skin. We've seen COVID. I mean, Axel, there's not been easy years from that standpoint, but because everything that what we do is developing technology, for us has been exciting years because we could have seen on the ground, boots on the ground, what really was going to happen live, real time, with real money invested and with our clients using our technology. So I guess that this is it's been to a certain degree a positive environment.
And it's true what Tommaso says, that these environments give us more and more proof cases of what we do. And just very glimpse, if Joana was showing us the regime change analysis, which actually goes down on a sector level. And so, for instance, when the Silicon Valley Bank issue happened, the analysis detected a change in the risk regime for the US financial sector within 2 days. So it's very, very quick. So I have two more questions. I think we should answer them, but very, very briefly. So one is from James in London. I paraphrase, and he wanted to know from Tommaso, if you go forward 5 years, there will be more applications, AI applications. So how do you then differentiate between all the different AI offerings that are available? So I think what I wants to say is, what you need to look out for if you pick a service, if you try to get help with AI, what are the critical things that should be given to do that?
Yeah, what I strongly suggest is it really scientifically based? Is the team, the people, the culture behind the company developing this tool, this technology, really rooted in science? Have they got the right processes for R&D? Because of course, AI is not two guys on a laptop. It requires a research center, a proper effort. That's why we combined almost 120 people working on Sphere itself. So that's definitely the first element, I would say. The second element is if there's a culture to run risk on the base of the model, and it's not just developing the tool, because the team, the people behind the model, they have to be aware that there is risk being run off the back of those models on a daily basis. That makes a completely different perspective on how people deploy new technology. They test this technology. They do it with a completely different approach. I do think that these are the most important element.
All right. So then next one, like Robert from Vienna is asking, is Sphere better in certain markets than in others? And to what extent does it expand also in private markets?
So it's not necessarily better than others. For sure, we don't look at like penny stocks, super small stocks, or emerging market stocks. We focus on developed equities in single stocks and global multi-asset portfolios for different fixed income, commodities, and equities as well. As what concern private markets, we look at them and this is a fascinating thing that you can actually test with Sphere. You can actually upload your portfolio with your illiquid portion. You just need to show Sphere what type of illiquid instrument this is, and Sphere is going to allocate coherently to that portion of that portfolio. We see a number of applications how clients are using this. They actually constrain a portion of their portfolio, saying this portion of my portfolio is invested into private markets and I cannot move it, but I want the liquid portion of my portfolio to react accordingly, and actually almost to use the liquid part to hedge against the exposure that I have from the private market. So these are again a new dimension on how math and model can help us in our day-to-day investment process in a more natural way than the rigid models, traditional rigid models that are out there.
Very good. I think we come to a conclusion now. So thank you all for joining us today. So we are surprised and grateful for the huge attention we are getting, and I hope we could answer all your questions. If there's something else you would like to know, please feel free to connect with us. And as I say, if you want to go for a test ride and get your portfolio optimized using Sphere, we are happy to do that for you. All right. I think here's the code again. So please scan it, and you would get back an answer a very short period of time. With that, thank you very much again. All the best, and make the best out of these markets. Bye-bye.
Bye-bye. Thanks a lot.
Bye.